What's going on, everybody? Welcome back to the channel. I appreciate you stopping by, spending a few minutes of your time here with me tonight. Tonight, I want to go over with you this DJ30 chart, all right, and just take a quick little look at some things that I find interesting, all right? And then we're going to go over some slides at the end that I want to show you. I want to show you kind of what we're looking for when we are trading the market, okay? Now, as you can see here, we had these shorts in the market, right? But you can see we break out, pull back, dump, break out, pull back, dump, break out, pull back, dump. We basically have the same damn trade 3 days in a row on the DJ30, huh? Don't you look at that? So that's very interesting, okay? And I want to show you sort of how we're using the levels here, all right? But today I did trade. I took the short trade on the DJ30 in the New York session here Wednesday. All right. But we're going to go over that in the next video that will be released shortly after this one. Okay. But I wanted to show you something else. I put it out in the Discord, right? Once I saw we had these 3 lower closes, I told people, hey, we got 3 lower closes here on the DJ, all inside of last Thursday's high and low range. All right. So I was very interested to see how this market was going to actually play out. All right. Me personally, I like to trade reversal trades, whether that is like this on the day, right? This day is pumping up, reverses at the high of the day, or if we will be down here working the low, right? Breaking out of the low of the day and then reversing to go higher, okay? Now, this is technically a continuation trade of this higher time frame downtrend that we are in right now, okay? It's a reversal on the day, but a continuation of the higher time frame shorts, right? Now, check it out. Here is Monday and Tuesday. This is the low of the previous day, Friday, all right? And you can see this market breaks down. There's our breakout, okay? This market breaks out, pulls back, and you can see I marked off these little highs from the bottom of the New York session, okay? We trade back into those highs before melting in the Tokyo session, the middle hour, all right? Little pump and dump type of trade, all right? Playing off of and around these daily levels, okay? Right? We broke out. Everything starts from that breakout, pull back, continue, right? Now, here's Tuesday. You can see this red line is the previous day's low. So even if you did not get in somewhere up here, you got to wait sometimes, right? So we break out of the previous day's low, but what happens? We break out, pull back into that level, and then continue, all right? So it's all around that level. A lot of the times this is going to happen. We're going to break that level, pull back into it, and continue. All right. Then here again on Wednesday, this was the previous day's low. You can see that once we broke out of that, we pulled back into it, above it a little, and then continued to go a little lower, right? So not every day is going to be super clean where we're going to break that level, then pull up way back in here and then go, but you can still use these levels, okay? Now, I told everybody in the Discord, right? I'm looking for, because I saw these 3 days, I'm either looking for this market to hold the volume down low, work into the low for the pump up, or I'm looking for it to pump up into the previous day's New York session high and low range before giving us some sort of reversal signal on the day to go lower. And that's exactly what happened. So I developed this if this, then that sort of mentality, okay? If this happens, then I will do this. So I was prepared to execute in whichever direction. I knew what I'm looking for, whether I'm going to be going short or I'm going to be going long, okay? And it just so happened to play out today, and we took the short trade. Now, here is Wednesday's New York session. Okay. This vertical red line represents the 10 o'clock hour. Okay. This is 10 o'clock right here. So this market opened, of course, it spiked up, right? But going into that 9:30, we are boom, we spike down to the lows and then go higher. That gets a lot of traders buying into this market, okay? Unknowingly buying into the high of the day. And you can see I had this square here that says do nothing. I painted this on live time while I was trading. I told myself, don't do anything here. The market's just bouncing around. There's nothing really clear that's happening here. All right. So I need to hold on for a little bit longer. And I waited until 10 o'clock. And you can see that right here, 10 o'clock, we get our M formation at the high of the day. And then we start breaking down. And I was able to secure a solid entry in here. And then I averaged into this trade, okay, and took it. I mean, we hit it good, bro. We hit it good. All right. And like I said, we'll go over that in the next video, okay? Now, I want to go over some slides with you to show you specifically the type of thing we're looking for on a daily basis, okay? Now, this here, these are basically the only types of trades that we should be looking for. These are the only types of trades, all right? We have our dump, coil, pump, and our pump, coil, dump template. All right. This is what we are looking for. All right. Today we had this in the New York session. Okay. Well, over the course of the day, but this New York session. Okay. So we pumped up and then fell. Okay. So we can have different variations of this. And of course, it's not always going to say hit the previous day's high and reverse. I just like to trade reversals. Okay. So that's typically what I'm looking for. But this same thing can be a continuation of a larger time frame downtrend, just like we saw today on the DJ30 and Tuesday and Monday, right? And that's what this represents. You can see we had a day down, then we pumped back up into the previous day's range before breaking down and continuing the short trade. This is the same thing, but opposite, okay? We have a day that closes green, then we dump back down into the previous day's range before pumping and continuing the higher time frame longs. All right. And now I want to show you this. Okay. So these are just examples of how different days might play out. So we might have this market that sort of grinds up all day and then barely takes out a previous day's level before reversing. Okay, that could happen where we just barely take out that level. Right? We could also have it where we really go up here and take out that level, 25, 75 pips beyond the high before breaking down, right? We have our sort of like a death line thing right here. As soon as we break back inside of that range, it's off to the races. You know what I'm saying? They're not coming back. We're aiming for the opposite side of the range. We could have something like this, where this market is dumping down and then breaks the previous day's low in London before reversing. And then we have sort of a continuation trade in the New York session, okay? We've dumped, we have a peak formation high, peak formation low, higher highs on the inside. We dump back down into the session for the continuation long, all right, after a breakout in the previous session, okay? Or we could have something like this, where this market breaks down, breaks out in London, pulls back, and then breaks out again in New York, retesting that low, little double bottom, before we pump, pull back, and go higher, okay? Or we could have something like this, where this market just is continuously making lower lows throughout the day. Okay, Tokyo goes lower, London goes lower, and then we break out going into the New York session. We have sort of a inverse head and shoulders pattern here before we pump up, right? So those are some different variations, the types of things we're looking for, okay? But these are the only types of trades that we should be looking at taking, okay? This is just how the market moves, right? It's just how the market moves. But this is the type of thing that we're looking for. These would all be examples of a well engineered chart on the day, right? Where it's very clear. We don't have something that's like coming, chopping down here and then going all the way back up here, then coming all the way back down here, then chopping around in the middle, coming way back down here, and then going way back up here. All right. We don't have nothing like that going on. It's very clear what's happening once you see it, right? We got a dump, coil, pump. Okay. We have a dump, coil, pump, 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 coil, dump, pump, coil, dump. Okay. Every single day. All right. Take another look at this where we have lower lows, then we pump back up into the previous day's levels before continuing, and then take a look at this chart. You can see, right? We pump back up into the New York levels, dump. We pump back up into these New York levels, dump. Pump back up into these New York levels, dump. The same trade every single day, the same time of day. All right. The market moves this way, and you can learn to recognize it and make your trading very simple. Okay. Anyway, man, until next time, I hope you continue to free your mind.